Good morning. Welcome to the market forecast. Today is Thursday, February the 18th. As always, thanks for trusting me with your time. I'm John Hoagland, and glad to see everybody with us this morning. Seeing some good comments here, and we certainly do have some decent opportunities for us today. As always, we're going to look at these markets through in context, through the lens of risk management, starting with the eco numbers that did come out here this morning already. We've had the housing starts numbers, the jobless claims, Philly Fed, and the trade balance. Looking at these numbers, building permits were up, housing starts down. The jobless claims seem to be worrying our equities markets, at least initially this morning. Initial jobless claims, 861,000. They were looking for 765. So not a good number. Continuing jobless claims also more than expected. There were also revisions to last week's numbers to the upside. Not good news as far as employment is concerned. The housing starts kind of innocuous. Building permits up a little bit. And as far as the Philly Fed, that number came out a little positive. We were looking for 20, came out 23.1, so a good number there. As far as I'm going to look too much into the trade numbers, export a little bit better than expected. So if there's anything that's going to probably affect our markets this morning, it's probably going to be the jobless claims numbers, and it seems to have our equities on the run just a little bit this morning. As far as news is concerned, the House of Representatives Financial Services Committee is going to be hearing testimony today from Robinhood, Citadel, Melvin, and Reddit as regulators look into signs of possible market manipulation with that whole meme stock situation. I'm just hoping that the government doesn't get too involved in it because they can wreck just about anything. Please keep our markets free. Texas is still in the deep freeze. Blackouts expected to continue throughout the day. Lots of people without power, and we certainly hope and pray that everybody is okay. The API yesterday showed a draw of crude of about 5.8 million barrels. We're looking for an EIA to show about a 2.4 million barrel draw, but still our crude stocks are still above average, even though they've been kind of falling off for the last few weeks. Certainly showing in price. Walmart, Nestle, and Marriott announced some mixed earnings this morning. Applied Materials and Roco were looking for in the afternoon session of releases of earnings today. So as we open up today, looking at the VIX, it's up a little bit, about 9% actually. A little bit of fear coming into the marketplace. It seems, according to VIX, 23.54 the last time I looked, and the dollar is down just a little bit, still holding kind of between that 90 and 91 level at 90.57, right in the middle there. So, as always, make sure you like, share, comment, question, feedback, and heckling are always welcome. Good morning to everybody. Felix, the infamous Felix Escobar, is first one in the room today. Felix, you win the prize. Good to see you back on top. Tanya, good morning. Ralph, Tanya, Murph, good morning. Yes, another beautiful day. It's a little bit warmer here in Chicago. I think today it's probably around, 15. And a little bit of light snow on coming from a seemingly sunny sky. February 18th, just another day closer to spring. And I'm looking forward to that, of course. Good morning, Clarence. Good morning, Rick. Good morning. MSS Capital, another great day of opportunity. Absolutely. Bill, good morning. Oleg, talking about Tanya and Felix's interviews. Those were very good interviews. I enjoy watching those. It's wonderful to see. Felix is already Rob T. Good morning. Felix is already moved into the premium funded account. It's always difficult. No matter what, trading is difficult. But remember, these difficulties that we see in trading are one way of looking at things, but it's also an opportunity for us to find our strengths. So keep looking for those strengths, Felix. We're looking forward to your continued success. Richie B, good morning. Brian D, Tanya Taurus, Danielle, guten Tag. Shane, Caesar, Andre, Laura, good to see you. Troy, good to see you. D. McGregor, good morning to you too. Trading Research, Mr. Shine, James, Patrick, Danny, Jose, Main Point, good to see you as always. Keep it slow and alive, absolutely. The chef is here, Mike Magianes. Esteban, the Will, Bulldozer, good morning. Angelina, Vast West Dream Team, Institutional, Prophet Eon. Yes, Bulldozer, there was a good session yesterday. I hope that that explanation of the opening range trade is going to help you. Let's get this man thumbs to warm his heart. It's cold out there. Absolutely it is, man. Let's get the whole country warmed up a little bit, huh? That sounds like a good idea to me. Good morning, Steve, Jason, Ashton. If I see a couple of new names here, welcome to the Market Forecast. Thanks for chiming in and saying good morning. As always, we're going to see what we see in these markets, and that's what we really kind of want to focus on. The fundamental information is one thing. What we see in the charts is sometimes a whole nother story. And when we're looking at these markets, it's important to think about them as auctions. How good of a job is the market doing in its current auction direction, if there is one? If it's balancing, that's important information. That's a strategy on its own. If it's trending in one direction or another, that is also another strategy. So be thinking about always, whatever market you're trading is it in a direction? Is it directional or is it non-directional? If it's directional, how good of a job is it doing getting there? And to do that, we look at the charts, we look at our indicators, hopefully not too many. We don't want to be overcomplicating things, but looking at volume and open interest is also helpful in that regard, because when the auction is falling off, when the directional activity starts to slow, it's going to show in the volume and sometimes even in the open interest. Crude oil is in rollover. We're going to be looking at the April contract today. April has more volume in it, of course, so we're going to be trading that today. And rollover does kind of blur some of that information, some of that volume, some of that open interest. Back in the day, when rollover was in the S&Ps, there were a lot of traders that really didn't even want to trade it. It just made it difficult for them to make their decisions. The market changes a little bit. It's a little bit sometimes illiquid. Sometimes it goes further. Sometimes it doesn't go far enough. Rollovers can be difficult, and that's one of the challenges we have in crude oil. Is it happens every month, in the equities and in the treasuries and the currencies. It pretty much happens, every 3 months. There's a couple of weeks there when things get a little bit dicey for us, but we're just keeping our eyes on when those rollovers come, and being cautious at those times can be certainly helpful for us. So, speaking of the rollover in crude, let's see what we're seeing here in the charts. As always, starting with the daily in crude, going from left to right. Here we go. April, front month. It's only a 4-cent difference, not changing any levels, any inflection levels, any weekly kickoff levels just yet here. So we're seeing the continuation of this market. 59.80, which was our high from last week. We've accepted above it. I could certainly say that. We've got 3 solid closes above it. We're seeing volume coming into the April contract. Again, this is a little bit blurry because of the fact that it is rollover. But as far as measured moves and possible continuations, we're looking at 64.80 as a potential area where we're going to look for a change in inventory in the longer time frame. Overall volume is a little bit lower. We lost about 6,500 in open interest overall yesterday, possibly just rollover related. So again, we are directional. We're getting signals that volume was a little bit lower overall and open interest fell off. But again, remembering that we're in rollover, this is going to be a little bit of a difficult time to use those as tools for our decision making. The momentum still it seems to be remaining to the upside off our upward move yesterday. Fundamental pressures still seem to be pushing prices higher. Again, the EIA is expecting a 2.4 million barrel draw today. API announced a 5.8 million barrel draw yesterday. But again, the supplies remain above average. We're just seeing what we're thinking about crude oil in the future here. Let's take a look at the 30-minute and see what we look like on the open here. Settlement is 61.16 in the April contract today. So where are we? Well, we don't really have any overnight inventory. If we got a little bit too long last night around 8 o'clock, 9 o'clock, we've reconciled that already. We've got a little bit of a gap here that opened when we opened up. We closed that gap. So being rollover, I'm going to be cautious here. I'm going to try and wait for good trade location as the day goes on. It seems as though this gap fill may be supporting price for now. And this is going to be kind of a pivotal area for me today. Our high from yesterday, approximately 61.30 in the regular trading hours, settlement in the area, and overnight low. This looks like a kind of a target-rich environment for me here. But I'm going to try and stay patient. I'm going to kind of look at this as possible support as long as it holds. And again, if anything I do, I'm going to be looking for the best possible trade location as close to a point of invalidation as I can get. So far, what I see from our overnight and from what we've been doing here this morning, our overnight low looks like one of those cheap trades, one of those opportunities to look for excess off the low from the overnight as possible excess off the low for the regular trading hour session. Take a look at the E-mini S&Ps now. Volume has been really kind of holding up over the last couple of days. Let me get this so that we can all see here. And here we go. Obviously, we've been going from the lower left to the upper right for about a year now, since we put the low in March. We've seen volume kind of maintaining in this area of virtual balance that we've been in for 1, 2, 3, 4, 5, 6 days here, just kind of digesting new prices and open interest. While volume has been remaining, open interest yesterday, we came off about 3,500 contracts. That's the estimated open interest. So perhaps a little bit of liquidation of positions. 39.20 still is presenting itself as an interesting opportunity for executions. We're well below that now. Again, the jobless claims, I think, has thrown a little bit of water on the upside fire, if you will, in our equities here this morning. So let's take a look at the 30, and we're going to be opening up here in about 15 minutes. Are we going to be opening with a gap? Do we have any overnight inventory that might be influential on price early in the session here? And with settlement all the way up here at 39.28, we've got some considerable overnight shorts in this market. They have now kind of leaned into those shorts with the information from the jobless claims this morning. Perhaps where we might be at risk of opening with a slight gap to the downside. Looking at it this morning at 6 o'clock when I sat down, I was like, wow, we're really just kind of in balance here and in range and in value that has now changed. So we've got, again, some pretty considerable overnight shorts here. I'm thinking, if I'm going to be looking for opportunities to sell strength, I'm going to be looking up around this 39.20 level, which is pretty close to our value area high from yesterday. I'm going to be watching the open very carefully this morning. That opening range trade that we talked about in the group coaching yesterday may come to pass today. If we leave the opening range at the high of the session, there's plenty of space for us to look for opportunities to fill in some business, some past business. We've got a gap down here around 38.67. We also have a kind of a naked point of control right down here at 38.55. So those are some of the weaknesses in structure that we've left behind. And if we head towards those levels, eyes will be focused on them, and when traders are focused on a specific price range or area, they tend to make the market go there. So watch your opening range trade in the S&Ps today, especially if we open with a gap. NASDAQ. Okay, similar situation, but different. NASDAQ has been presenting as much as the strongest of the indices, if you were to ask me, and that's, of course, my opinion. Are we starting to form a bull flag, maybe? Maybe. We see, the overall trend to the upside. We've got some smaller ranges. We may be extending those ranges today, it looks like. Volume remains strong. Open interest, we lost 1,600 yesterday. That's kind of a moot number, not a big change in open interest. 6-day balance, 7-day balance, whatever. Things have been changing a little bit here since I sat down, and that the fundamental information in the jobless claims seems to be dragging price down a little bit here as we digest that information. If there is no more bad news that may come out today, and there's always that chance, I'm looking for these markets to kind of stabilize and perhaps get a nice move back to the upside. But again, a lot of that is going to be dependent on the gap that we are probably going to create here in the NASDAQ this morning. Settlement all the way up here. So we do have some pretty considerable overnight shorts here that are getting paid. They're seeing price continuing in that direction. So I think they're sitting pretty comfortable right now. And again, here's our low from yesterday. If we open with a gap, I'm going to be watching that opening range trade again, because we're going to be opening out of balance, and it's maybe a little bit of a higher probability that opening range may pay us. In the NASDAQ, the opening ranges can be pretty substantial as far as risk is concerned. I'll be probably focusing my activities on the S&P and the opening range trade, because the NASDAQ gives me heart palpitations. It's just too whippy and illiquid for me. A lot of people love it, and that's great. That's wonderful, as long as it's a product that pays you. But for me, I'm more of an S&P guy. So again, doesn't matter what I am. If you're trading the NASDAQ, watch the opening range today. If we get an opening range that gives us that opportunity in a cheap fashion, think about looking at that opening range trade. Gold. The volume is kind of holding up here as we have moved below our weekly kickoff level, and we've kind of found support yesterday near a previous weekly kickoff level. This was last week's kickoff level. It was 1770, 1790 is our kind of line in the sand for us today. We're right in the middle of it. We have an inside extended trading hours range so far today. Maybe there's a little bit of digestion due here. Volume was a little bit off yesterday, and we did lose 3,100 in open interest. Perhaps a little bit of short covering on this move to the downside, close to this inflection level, which largely is created by this previous swing low back here in November. So today we kind of have two weekly kickoff levels to kind of focus on, and we're going to be kind of focusing on the extremes for our opportunities today. I believe a lot of what we're talking about is the fact that we're still back here in value. We're inside of value from yesterday. Do we have some overnight longs? Settlement is right here, 1772.80. Perhaps we do have some overnight longs. If those overnight longs decide they're going to get out, they may take price back to settlement. We've got our overnight low between current price and that settlement level. And then, of course, we've got that previous inflection level at 1770 also with which to look for. I'm going to stay patient in this morning because, again, we're kind of stuck between a rock and a hard place. And I'm going to look at these extremes for my opportunities. Not really that interested in anything in the middle here. Right. To the euro. Volume and open interest were higher yesterday on this move. Lower and on a close below an inflection level. Kind of indicating possible acceptance of that. Not really showing that for us today with our dollar a little bit lower. We're seeing the euro coming back a little bit. This 2090 level still is going to be impactful even though it is a previous level. Take a look at the 30. Let's see what we're looking at here. So here's our 2090 level. Here's our 2057 level. Here's our close below that, which was 2043. We're holding some pretty substantial overnight longs here. The potential resistance that is being provided by this previous weekly kickoff level, this 2090 inflection level, might be a pretty decent opportunity for us. We've got some of our direct competitors, some of our short time frame, weaker hands traders long here. If we don't see any continuation above our inflection level here at 2090 or our overnight high or our current high, as the case may be, we may see these traders decide they're going to get out, and we may see that this market come, number one, close the gap, and then retest this 2057 level. And if that doesn't hold, then of course our overnight low and settlement and value low are kind of a target-rich environment. So we'll be looking at that. If we get the opportunity, of course. The 10-year, some pretty strong volume yesterday. We were kind of talking yesterday about watching out for the contrary moves, which can be vicious, and I think that's basically what we had yesterday was a kind of a choppy contrary digestive day yesterday. We moved, past an inflection level largely created by this swing low. That swing low providing resistance for us in the overnight, which is probably going to make today a little bit more difficult. We did add 45,000 in open interest on an overlapping to lower day, even though the overall direction was to the upside in the short time frame. It was to the downside in the longer time frame, thinking that we probably leveraged into some continuing shorts below that weekly kickoff level. 30-minute chart. Okay, no real overnight inventory. We did get into some. We've already reconciled that. Going to be looking for. We're going to be basically. I think I'm going to be staying patient here today. Before when we opened, we were inside range and value. We're still inside range. And I just, not necessarily seeing any great opportunities early today. So I'm going to stay patient and I'm going to look for the market to set up some sort of structure for me to look for an opportunity at one of the extremes today. Our overnight high relatively close to this previous weekly kickoff level, or to our weekly kickoff low, I should say. And then I'm going to be looking, perhaps near our lows from yesterday, and looking for some sort of structure to it to present itself down in that area before I really look for anything here. I think we're a little bit digestive here. We got a contrary move coming here. Could end up kind of presenting itself as a bear flag from the overnight last night, or from the overnight a couple of nights ago. We're seeing higher highs and we're seeing higher lows. If we break this low here, that might be enough to break a potential bear flag, and we may see this market continue to the downside. Again, anything can and will happen. This is trading. This is how it goes. And I look forward to the opportunities that we have today. As always, I'm going to suggest looking for those asymmetric opportunities, smaller risk and bigger rewards. Avoid the juicy middle. It's very tempting, but that just seems to expand your risk. So I'm going to take my deep breath. We are ready for the equity open. Stay humble, grateful, and creative in your trading today. Dan sends his regards to everyone. He will be back with us soon. He is doing well, and I will be with you again today for the market recap. Looking forward to seeing you there. Trade well today. Get out there and profit today. Remember, the difficulties are not here to point out our weaknesses. They're here to help us find our strengths. Have a great trading day today.